Okay, let's run through some questions from Sunday's Market Outlook. I have not had a chance to look at any of them, so these are all new to me. First one, if you multiply SPX with DXY, which I think is a proxy for the intrinsic value of the SPX, given that it factors in dollar strength. I'm lost already. Then there really wasn't an all-time high. Yes, there was. The rally this week coincided with the weakening DXY. So what? Why are you multiplying a US dollar-based equity index with a US dollar index? I'm not following the logic of that. I'm not following the logic of that. The SPX hit an all-time high. Period. I'm just not understanding why you want to use DXY. Maybe if you are you trying to express it in a foreign currency? It doesn't work because the price of the SPX is a US dollar price. I don't know that it really matters. It did hit an all-time high. Channel like this for oil markets. Doomberg, if you're looking for energy, the best one out there. I don't know if it's BERG or BURG, but Doomberg. Garmin is big in outdoor watches. I used to have a Garmin watch, actually, now that I can recall it, but I had it because when I walked my dog, I just tied to the leash handle. So it would track how many miles a day we walked. But the iPhone does the same thing. So 2000 level 1 video is going to be accessible beyond the spring. I saw an expiration date. I asked about that. Nobody knew anything about that. A few questions. Last jobs report. Average weekly hours was down. Real output keeps growing. Atlanta Fed forecasts 2+ growth in the quarter. Does that mean the productivity is higher than we would have thought? Well, average weekly hours, if you can count GDP by the expenditure approach, C plus I plus G plus X minus M. And we know that GDP equals GDI, which is gross domestic income, wages only being one part of that income. There is rent, there is interest, there's profits, there are other components to national income. Wages just being one of those components to national income. So being that GDP equals GDI and wages are one component of GDI, it doesn't fully account for GDP. So growth can come from other sources. So I don't know that I would say that from that I would draw productivity, although it correlates, I'm sure. Could it be that analysts have high earnings growth estimates for IWM because of low base effects after the earnings have been created? Well, yeah, earnings were negative. There was negative growth in earnings. Yeah. And when you say could it be, sure, it could be that. I bought T-bills for the cash I wasn't actively using for trading. And when I saw the P&L report for my BK, it showed that I had lost a small amount of money overall, including transaction costs. I held the T-bill to maturity. Is this normal? No. Or is it because I hadn't put a big enough amount in them? No. You bought a T-bill, which means you bought it for 90. Even if you bought it for 98, it matures at 100. There's no way. I mean, even with 1,000, even if you only bought one T-bill, $1,000, you paid 980, matured at 1,000. I don't think you paid $20 in transaction fees, unless your base currency is not the U.S. Right? Then maybe your currency changed on you so that it took away the profit. But no, that wouldn't be right. How do we use the PCR? What's the PCR? Do we interpret it as a sentiment indicator, as a more contrarian signal? I don't know what the PCR is. It's not coming to my mind right away what PCR is, so I have no idea. I do have a question about the release schedule. Will the videos be up at the same time? I checked with IT. Yes. That way people can use the YouTube notification. That's exactly the point that I had made, that use the YouTube notification, that it is on the site. Yep. How would the Treasury and or the Fed control the 10-year yield? You can avoid issuing on the 10-year. You can create a shortage on the 10-year. It's used a lot for hedging purposes, so if you create a shortage there. You can encourage the Fed to rotate out of MBS and into Treasuries. In other words, sell your MBS and buy 10-year Treasuries. You can force them to do that. The strategy that Besant seems to think is going to work is to demonstrate to the market that you can cut spending and increase energy output. And he says if you can do that, the market will do the heavy lifting for you. Mention utilize a model of likely outcomes given certain conditions or circumstances. I'm looking to develop something like this on a basic scale. It's my first go around. Background in regression modeling from college, and I'm confident in that ability. Simply regressing GDP or S&P returns. That's been done to death. See, a waste of time, as I'm sure this has been done a million times. Yep, there you go. Any insight on where to start, or even a different way to model? Well, when you say you want to do something like that, that's a very macro level thing. So it's a matter of, what relationship do you think exists, and is there some quantifiable way to determine whether that relationship is in balance? Sometimes relationships move out of balance and then they come back into balance. They mean revert to some relationship to each other. Everybody out there is doing that kind of thing. Everyone is trying to find some magic formula. Everyone is doing it. And statistically, 5%, if you have a 95% confidence interval with all these people testing all these relationships, 5% of them will show up as saying, hey, we found something, but there'll be nothing there other than just, if you're using a 95% confidence interval and you test enough relationships, 5 out of 100 tests are going to say there's something there. And there's nothing there probably. I don't know that these quantitative models, I don't use quantitative models, I just use logical models. I have some idea of, broad relationships between things, or how, I guess if you think about it more in a game theoretic way, I don't know. I don't waste my time with a lot of these models, because if it's a relationship that is, that there's theory behind, everyone knows it, and trying to find relationships that nobody knows about or that haven't been uncovered. If you go through the finance literature, the academic finance literature, anything and everything that could have been tested or theorized or hypothesized has been tested, theorized, and hypothesized in a journal article out there somewhere. I don't know if there's any field beyond finance where the data sets have been picked apart so much again and again as finance. And I don't know that it would provide much value. So, I don't do it. I don't do any time series analysis. I do very, very little quantitative analysis of anything. I don't find it very valuable. Concerning the recent trend, core PC inflation is consistently underreported compared to core CPI. Well, it always is. By what magnitude could this discrepancy affect the Federal Reserve's decision-making process? Well, I don't know. By what magnitude? I don't know. No idea. Also, if we can get an update on the insurance video. I'm on screen 7. The document I have is, I always write the document first, right? You put it in Microsoft Word and you write the document. You put all your notes in the Word. So just all my bullet point notes are 16 pages long. And I'm on screen 7. I'm almost done page 3 of the Word document. At this point, it's just a matter of transferring my bullet points from the Word document onto screens and narrating them. The research is done. But just to caution you here on insurance, it's not interesting. I mean, it's, the two types of insurance companies, or the two broad types. You have property and casualty and life and health. They have different balance sheets, and they have specifically the way they manage their asset portfolio, and the way they invest their asset portfolio, and the nature of their liabilities are different. That's, if you can understand that, that's the big difference between the two. They're in the business of absorbing risk and investing assets. That's their biggest business. But overall, it's really kind of boring. There's really not a lot of excitement there. I wouldn't call it a growth sector at all. You're usually holding it for good steady returns, at least life and health. Do you have any thoughts on M-REITs at the moment? Mortgage REITs, not really. No. Until I see what the Fed wants to do with its something over 2.2, 2.3, $2.4 trillion of MBS. If it starts moving that into the 10-year, if the administration and the Treasury lean on the Fed saying, look, we'll leave you alone on the interest rate, but you got to move on the mortgages. You got to start lowering the long end of the curve. And if they have to start putting mortgage MBS out on the market, that's going to increase the supply. I don't have any opinion on them, other than they're a good income earner right now. I don't know that I would suggest that they would have a growth role in the portfolio. The mortgage REIT, just so that you can understand its relationship with interest rates, there is a risk-free component that is usually pegged to the 10-year, and then above that there's the spread for the fact that there is some credit risk associated with mortgage-backed securities. The mortgage REITs usually hedge out this component so that it's not there, and then they use leverage, anywhere from 7 to 12 times leverage to lever up the spread. So if the spread stays constant and interest rates are really volatile, the income is sort of fairly stable for the mortgage REIT. When high levels of uncertainty, the leverage ratio usually heads down to a lower ratio like 7, and when it looks far more certain in terms of spreads tightening, the leverage ratio increases upwards. I think most of them have fairly low leverage right now, but they do hedge out the risk-free component. What are your thoughts on using Berkshire as an alternative to SPY ETF? Well, he's moving to cash. He keeps selling and he keeps moving to cash, so Berkshire's holding a lot of cash. SPY does not hold any cash. Now, if you're expecting some volatility, that would make Berkshire less volatile than SPY, but SPY is a fully invested ETF. Berkshire is not a fully invested, if you want to call it an ETF, because it holds a bunch of companies. If Elon really cared about finding fraud and reducing waste, I think he does care. He would have brought a team of CPAs and seasoned forensic accountants. Yeah, but he didn't do that with Twitter, right? He bought Twitter, cut 80% of the staff, and it still worked. The business still worked. So I don't think I think he has seen over time, from his playbook, that he's done it before, and the company continues to work. So why would you leave your playbook? I think he cares. I think he cares. He just has a different way of going about it. It isn't about cutting waste. It's about scoring points in a cultural war. Well, I'm not going to deny that there's some part that is trying to score points in a cultural war. However, he just happens to be on the side I agree with in terms of that cultural war. So it's hard for me to really side with you and say, yeah, he's doing it all wrong. It's like, well, maybe he is. Maybe there was a better way to do it, especially when it comes to political spending. It's not as clear cut as business spending. Sometimes, with business, the one word when we're looking at spending is the word efficiency. With government, you have to focus more on effectiveness. And sometimes effectiveness is not that efficient. It can be, you accept a certain level of inefficiency to be effective. But in business, you want to be, once you're effective, you have to start worrying about getting efficient. That may be difficult to do in politics because of the trade-offs. With a business, it's just maximization of shareholder value. Well, how do you measure maximization of citizen value? As you point out, it's scoring points in a cultural war, so I imagine you're on one side of the argument. I'm on the other side. Who do we satisfy, you or me? Right? Regarding gold miners' operating leverage, Newmont's last call, they explained their costs aren't really fixed. While the price of gold is rising, less and less gold per unit being extracted. That is true. When I say operating leverage, it's usually asset-heavy companies. We say that they have operating leverage because a large part of their cost structure is generally already in place. It is already fixed. You already have all of the investment in the assets that are there. And the variable costs are lower. Usually you have low variable costs, high fixed costs, because you're asset heavy. But, nothing is absolutely fixed. It is generally fixed within a range. Gold prices could be outpacing that decay rate. Okay. Curious how you manage flash crashes or sudden jumps in markets which go against your favor. Flash crashes never go against my favor. Flash crashes are buying opportunities, and I look forward to them. I mean, I hate days where, here's where the market closed, and then it does this. We do this all day long, and we just, we're above the zero line below. I hate days like that. Either give me this or give me this, but don't give me this. These ranges where you're trading in a 0.5 or 0.6% range on either side. Actually, I drew those lines wrong. When markets go down, they tend to do this. When markets go up, they tend to do that. It is asymmetric. You ever hear the expression escalators up, elevators down? I love big down days. Big down days, and what I miss about down days is the follow through. Used to be that if you had an ugly day, it would follow through for a couple of days, and if you just hung out, you could pick up things really cheap or cheaper. Not anymore. You have a big down day, it's just as likely you're going to get one of these recoveries the very next day. So you can't just sit around and say, well, let's give it another day. So if you're long, you're going to get big down days. Those are opportunities to buy. If you're short, you have to be tactical. There's buy and hold, but there's no short and hold because there's no limit to how high something can go if you're wrong. So you have to be tactical when you're short. Usually you're short when it allows you to be long something else that you normally wouldn't be long. So it's very dangerous just to short something and just be short that one thing. I've done it, but it's, you're watching the screen every now and you're always looking over at it, always watching what's going on because if it moves, you have to be very tactical. It's a lot of work, being short unless you're extending your long positions, unless it's a what's called a long extension. Mentioned February PCE figures may be available before March 17th meeting. No, February CPI will be available. The PCE that we're getting one PCE at the end of the month, but that's just going to be for January, and I'm sure it's going to confirm what we saw. Actually, no, because we've already gotten CPI and PPI for January, which has already amended the PCE that we're going to get for January, because the PCE has higher weights in categories that came in lower than expected. So no, I don't think I messed up on that, unless I said March instead of February. Theoretical question regarding WACC, EV, and equity value under a static WACC assumption, meaning it's unchanging, discounting free cash flow to the firm at WACC, which is what you would do if it's free cash flow to the firm. Use weighted average cost, subtracting the debt and adding cash yields the equity value. You're discounting the cash flows. You're subtracting out, so you're subtracting debt and adding cash. Usually it's the expression is you subtract the net debt, which is okay. Subtract the debt and add the cash. Subtract the net debt. Discounting free cash flow to equity at the cost of equity also results in the same equity value. Unless you have preferred in there, you'd have to take the preferred out, right? Unless you have the preferred in there. How can I discount a project using a WACC that changes with capital structure? What you would do is you would figure out what your target capital structure is, and you would use a target capital structure. So the weighted average cost of capital is about the marginal cost of capital, not your average cost, but your marginal cost. So you'd target a capital structure, and your weighted average cost of capital would be the marginal cost that you would use. Now, a company, when it issues new debt or new equity, it does so at its marginal cost, which would be the highest number that you would get. That's a conservative estimate to use, but use a target. If you don't know what the target will be, you can find a comparable project that has the target. Maybe there's a comparable company out there that's kind of doing what the project is, and take their beta and de-lever it, and then use that and lever it up for the target beta that you're using. Main assumption behind WACC that the capital structure remains constant. It's easier if you assume a target capital structure. Sure, use a dynamic WACC with the equity value derived from free cash flow minus debt still measured. Oh, I don't know. I don't know. I think that would be really, really complicated, and all you'd be doing is guessing at the timing of everything. And since you're guessing at the cash flows and you're guessing at a whole bunch of stuff, I don't know that it's really worth trying to get super, super precise on one thing when it's really just guesses anyways. If you build conservativity into all your guesses and you're still getting a good net present value, positive net present value, then it should be fairly good. After that, you'll do some sensitivity analysis. So pick a weighted average cost of capital, and then just do a sensitivity analysis. Change your weighted average cost of capital, down 50 basis points, down 100 basis points, up 50 basis points, up 100 basis points, and see what range of net present values you get. If they're all positive, one thing you can rely on is that, hey, listen, within this 200 basis point range, if we land in here, anywhere in here on average, we're going to be okay. How many books to read on a single topic? One, maybe two. Like, for example, economic indicators. Oh, God. A book on economic indicators is the most boring thing in the world you'll ever read. Investment management, inflation, to get a good grasp of the idea or topic. Don't know that you even have to read a whole book, right? Live in the real world. There's a limit to how many books you can read about something before you actually just start to do it. Experience is your best teacher. Just jump into the real world and start living with real data. It's messy, but experience is going to be your best teacher. There's a limit to how many books you can read about this. It's like, especially with finance, it's like reading a book on swimming. While it may talk about the physics of buoyancy, you're certainly not going to become a swimmer, right? You're still going to sink the moment you jump in the deep end of the pool, because it requires muscle memory. It requires actually doing it and feeling it. Same with a book on riding a bike. You could talk about the physics of it, but that's still not going to help you get your balance when you're riding a bike. I don't know that beyond, the vocabulary and the theory of things and the broad relationships, if any book is anywhere near where market practice is these days, just jump right in. I get that question a lot. What books can you recommend on this? The Book of Life. Jump right in. Start playing the game. I don't know when to stop. I don't know when to stop because of fear of missing out, that I will not know when this whole thing, I will not know the whole thing or miss something if I don't read all the books available. Wow, you're never going to know it all. You're never going to know it all. Ever. 50 years in doing this, you'll still never know it all, right? You'll either focus on one sector and become a very good specialist that still doesn't know it all, or you're going to spread yourself across a whole bunch of sectors and be a very good generalist that still doesn't know it all. Either way, you're still not going to know it all. And there are benefits to being a specialist. There are benefits to being a generalist. I'd relax on the books. Just start living. Going through the book recommendation section of your website, 2 books caught my attention: Pitbull and Investing in REITs. Do you think Pitbull is still relevant? No, not really. It's not really relevant. It's a good book. But it gives you an idea of how a professional lives their life. But no, it's not going to teach you anything. It'll give you an insight into the mind of the man, but it certainly isn't going to be anything you're going to take away with you. This was done in the 80s. It's a different world today. Glance at the table of contents, investing in REIT books. It looks very interesting. I'm also watching your applied level REIT sector study, so I'd like to know, should I complement my learning with this book? The author passed away, so there's going to be no new editions to it, and I feel that it could use some upgrading in certain places. It's not as real world as I'd like it to see, as I'd like it to be. Not like it to see, like to see it, like it to be. I don't know that it offers much more than what you could get out of the CFA material for valuing real estate. Yeah, it's okay. I don't know that there are really great REIT valuation books out there. Yeah. It's okay. It's okay, but again, the author passed away, so it is dated now. It hasn't been updated for a while, and it won't be updated because, well, again, he's gone, right? I am a subscriber to Applied Level, past Level 3, no experience in financial markets. I'm lost in the Applied Level series. I don't know where to start. Go to sector studies, and actually, you know where you can start in financial modeling. Do the Costco financial model. That'll show you how to apply your CFA skills, and you'll develop a new skill on how to build a financial model in Excel, which is useful. Then go to sector studies and pick an industry you're interested in. Want to know something about, I don't know, the Federal Reserve? There's a 3-part series on understanding the Federal Reserve and the Federal Reserve's balance sheet. 5-part series on understanding banks. You interested in timber REITs? There's a video on timber REITs. You'll understand the difference between southern timber and northern timber. So, yeah, I'm just going to draw a square. There's the US, there's Canada. Most of the timber REITs for house building are down here in the south. It's mostly pine. Whereas for Canada, it's mostly over here, which is Douglas fir, is a better quality wood than pine. You have plantations up here in the US, but they tend to be hardwoods. So that's why this is desirable. It's a better wood. But pine is just as good as well. But the more north you go, the better the wood. Yeah, you learn that, right? Garmin's pivot from GPS devices to fitness watches. Okay. Go over the inflation on expectations argument in relation to steel and aluminum. Well, if you watch the futures price on aluminum when the tariffs were announced, there are no tariffs yet. They're coming. If we are to believe the blustering buffoon in the White House, they're coming. The futures price has already increased, and steel and aluminum companies are already taking this opportunity to price in the eventual tariffs, so their prices are already increasing. So if I expect, let's say that I'm making, I don't know, I always go to washing machines and dryers because that's the most obvious appliance that I can pick on. But if I'm making those and I expect the price of steel or aluminum to increase because it's an input to my cost, I'm already going to start to price it into my next model. I'm already going to start to send it out to my retailers that my costs are going to increase. Yeah, I'm probably buying my steel forward. And if I'm using forward contracts, my suppliers are probably already pricing in a higher price to me already. So if I expect something to happen, I'll start behaving that way. So the expectation could create the behavior, or would create the behavior, which means you could get inflation in those sectors without ever getting any tariffs. Do you need any MDs? Managing directors in your Discord? Traditionally not a group respected in financial circles. MDs, medical doctors, MDs, managing directors, MDs, mods. I don't know what the MDs are. So I don't know if I need them. Reports of extended delivery times for gold withdrawals from London. Yeah, that's to thinking that, well, there might be a tariff on gold entering the country, increasing from a couple days to as much as 8 weeks. Same time, speculation U.S. might impose tariffs on gold. Given that many American institutions hold gold in London, do you see this leading to higher premiums for physical gold in the U.S.? I don't know that I would say higher premiums. London gold is trading at a discount. Usually the discount per ounce is very low. It's rather high at this point. London is, if you're trading spot, you're trading in London. The NYMEX is for futures, is for future delivery. London is for spot delivery, which is why that's where the gold was, because you have it's in a vault, and there are shells in a vault, right? And the shells belong to different banks, and when there's settlement, somebody goes in the vault and takes a couple bars from here and moves it over to here, takes a couple bars from here, moves it over to here. These may go over there, and just moves gold around inside the vault. And that's, you're delivering spot, but the London market is more for spot trading. I don't know why why not just keep it in London? I get that you want to avoid the tariffs in, but I mean, like, if you were comfortable leaving it in London for years and years and years, well, leave it in London. Tariffs can last, if they are put on, I think it would really destroy the US in a lot of places, that you're probably looking at 4-year Republican leadership before you swing back to Democrats, and they'll be gone. One thing I think people are failing to appreciate, US government has already effectively defaulted on its no, it hasn't. Effectively defaulted? No, it hasn't. Not necessarily serious as a dead default. Well, do you want to? I mean, you're making a pretty bold statement, but then offering no evidence as to what it is, and then just continuing on as if it's a statement of fact. I don't think that that's a statement of fact. I think to me, that's not a statement of fact at all. Not necessarily as serious as a debt default. I don't understand how it can default on its obligations, but in the next sentence you say it's not a default. Surprised the market seems so sanguine about this. Seems you're the only one. You have a monopoly on the truth, apparently, and you don't seem to want to share it. Government stopped dispersing funds for grants for awards that all already been appropriated. All that by Congress. I don't know that I would call that a default of an obligation. So let's say that I say I'm going to give $75 to a charity, and I say that I'm going to do that, and I don't do that. I've reneged on a promise, but I haven't defaulted on an obligation, because there's no consideration in that. By consideration, I mean it's really just a gift, right? It's in the language of contract law, there's no consideration received for it. Whereas if I issue a bond, I'm receiving some money, and you're receiving an IOU. And in exchange, you're going to receive a series of interest payments. There's consideration on both sides. But if I say I'm going to grant you 50 million and I don't follow through, it's kind of crappy of me, but it's not a contractual default, because it really was just a promise. There was nothing in return that I was getting. There's no consideration there. So for grants, who cares? Effective notes. I don't think that's effective default. You already see banks pushing back on some loans, such as for affordable housing, based on government backing. Farmers took out loans based on promises of repayment from the government not being paid. U.S. government is defaulted. What am I missing? Well, you're assuming that these are contracts and not promises. These are just promises. And I believe in any program, the government has the right to change the term. Businesses change terms on you all the time. How many times you had to click on, hey, new terms and conditions, read this and agree? Right? They change it all the time. No, I don't see it as a default. I'm not a lawyer, mind you, but I don't see that as a default. see it as kind of shitty, but I don't see it as a default. How inflation is going down despite everyone screaming reinflation. One thing I don't really understand though is the positioning on small cap and duration, as it didn't really sync together. The yield curve dropping, it should support equity valuation. Small cap should benefit immensely. Well, look at the language here. Should benefit immensely. So you're I mean, with the language you're using, you're saying that the long end comes down. It's a done deal. It's going to happen. I disagree. Moreover, maybe short large cap has been deadly. Has just been deadly. Short small cap, because it's more volatile, has been more profitable because there's more opportunity to play both sides of that volatility. With SPY, the volatility it's few and far between, and it trends. Shorting large cap has not worked out at all. Nope, has not worked out at all. Where was this energy pre-election? Energy. I recall you wanted Trump in office because he would address the growing debt and wokeness, but now he's a buffoon. Well, he was always a buffoon. Is Canadian patriotism hurt by his actions? Not really. He's extremely profitable to have there. I'm having this so far this year. This is the best start to any year I've ever had. He's easy to play. He's absolutely predictable. And we do have, to some degree, at least to some degree, volatility. But in the last week, it seems like everybody's sort of figured him out, and sort of everyone is on the same page, and the volatility is disappearing. He's going to have to do something unexpected at this point, even unexpected to me. But if he behaves the way I think he's going to behave, I think everyone's on the same page on this one. He is a buffoon. I mean, he's as simple-minded as Justin Trudeau is. I've made this comparison before, that Trudeau and Trump are really the same person. They're just at opposite ends of the spectrum, but everything about them are identical. I think that's why they hate each other so much, is because when they look at each other, they see themselves. Just, again, opposite sides of the spectrum. If you had gone on the basis that Trudeau is pretty much an idiot, you pretty much were right the whole time. And you knew that he would not see his way to doing what was right for the economy, but he did what was right for Brand Trudeau. Same with Trump. I don't know if you heard him talk about, if you ever hear him talk about the parties. He talks about the Democrats and Trump. There is no Republicans. There are no Republicans in what he says. He talked about something last week. He was saying that used to be a Democrat thing. Now it's a Trump thing. Not a Republican thing, a Trump thing. It's Brand Trump. I think he really means what he says. He wants Gaza. He's just going to take it. He feels that he's just going to take it. He wants Canada to be a 51st state. It's just going to happen. He's going to beat them into submission. Well, he's going to try to threaten them into submission. But that's all he does. In my model, that's all he's capable of doing. So he's been very profitable. And I've also said this before. I would rather live under a right-wing dictatorship than a left-wing democracy, because the left will destroy the country. Slowly and slowly, the left will destroy the country. There is no single example of a successful socialist country, a country that goes so far left it goes social. There's no example of that throughout history. So I would rather have a right-wing capitalist dictatorship than a left-wing democracy any day, because it does turn into Aristotle's version of democracy, which is the tyranny of the oppressed, the tyranny of, he called it the tyranny of the majority. that it ends up being about revenge. And what was wokeism? If it was anything, it was about revenge. It wasn't about equity. It was about revenge. It was a racist movement. It was a bigoted movement. It was a sexist movement. They made everything about race, gender, and with that ideology that was elevated above everything else. In their minds, they could not reconcile that ability is distributed normally across all skin pigmentations. Distributed normally. And if that's the case, if you selected on ability, you would by default get diversity. The left couldn't, in their mind, come to that conclusion, which is racist in itself. I don't know that you could have a much more racist movement than wokeism was, and that had to die. Regardless of the type of death, it had to die. And I think that most of society was willing to take any alternative than that. Had Kamala Harris just came out and said that was a lot of fucking nonsense, I bet you she would have stood a better chance. She might have even won. I think that was the biggest drawback for the Democrats, is that they just wouldn't distance themselves from the crazy. Now, mind you, these guys are just as crazy. Well, I wouldn't say they're crazy. These guys are not smart enough to be dangerous crazy. This group, they're inexperienced, massively inexperienced. I know in Saudi Arabia today, Lavrov probably played Rubio like a fiddle and fed him everything he wanted to hear. They are out of their league against that guy. Out of their league. And Trump wants a win so bad, I'm sure he's willing to do almost anything. His algorithm is brute force. He has no finesse. But still, it's better than the alternative. If Trump were running for the Conservative Party here against Trudeau, it wouldn't even be a thought. It would be Trump. Even though I know he's a buffoon, it would still be Trump. What are the best alternatives for institutions to reach for additional yield that is still relatively safe? Well, T-bills. It offers daily liquidity outside of money market mutual fund. T-bills just go directly into T-bills. They're liquid. They have a higher yield than the money market fund because there's no fees associated with it. Commercial paper. Commercial paper is relatively safe. Bankers' acceptance, that's relatively safe. You can go into the investment grade money market and buy those securities directly. Applied Series user want to ask your opinion on investing in companies that run operations in financial markets linked to operations in future. That run operations in financial markets linked to options and futures such as SIBO. Well, okay, they're not linked. That is what they do. I mean, they're an exchange. That is what they do. So I don't know that I would say that they run operations in financial markets linked to that. It's not linked. It is exactly what they do. Before the beginning of the year, after the election, I invested in SIBO because I had the thesis similar to yours that a Trump presidency will bring volatility. So when there's volatility, that doesn't necessarily mean more volume. It just means more volatility. So what tends to win there are market makers. So an exchange, I don't think engages in market making. So usually any bank, any significant bank with trading desks engage in market making. So there's where you would get it on any bank that has trading desks. Companies such as SIBO may be a decent prospect for an investment since it would likely see higher than normal revenues. Not necessarily. No, you want a company that actually doesn't trade the securities, but actually benefits from the volatility. Super invite level is primarily for high-level bankers and brokers. No, it's just for individuals that work in firms where compliance doesn't let them speak openly. So let's take a private wealth manager that works for a large bank that doesn't analyze assets or manage assets. They'll still have an issue in engaging in conversations in public forums. So no, I wouldn't say it's high-level bankers and brokers. And I wouldn't say they collaborate among each other. I wouldn't say they're collaborating, but we cannot see or peek in. No, not in the super invite. You can't. It'll just be a safe place for people who would otherwise have a real difficult time with compliance. Nothing to see in the week-over-week credit spreads. You're right, nothing to see. 2-3 basis points moves in all the spreads. Nothing to see. Investment thesis is, and how it can be validated. Well, investment thesis is how do you make money? It's kind of like a business model. You know, if you had a business that say, well, what's your business model? Well, I buy these things, I assemble them, and I sell them. Okay, so we know what your business model is. Or I buy these things and I rent them out. Okay, so you have a recurring revenue stream. There's your business model. An investment thesis is like, what's your business model? So what's your process? How are you making money in the market? Is it in a particular factor exposure? Is it a particular style? Is it more on growth? Is it more on value? Are you looking for deep value? Have you found some sort of structural inefficiency? Is it behavioral inefficiencies that you're taking advantage of? Are you a volatility trader? Are you looking for volatility? Do you have beta exposure? Do you look for neutral exposure, but exposure to the volatility only with very little market exposure? That's the thesis. Just think about it as it's what's your business model? And how do you validate it effectively? Do you make money at it? Right? You can back test it. I don't know that is going to provide you as much feedback as actually just trying it. Every time I have an idea of something, I'll try it on a small scale. And as it works, I'll start scaling it up a bit more and a bit more just to get a feel for how the underlying moves. And then I've got it. I don't spend a lot of time with a lot of back testing. I think more in terms of more of a hypothesis. Well, what if I did this and that? And then I try it. Wondering about your opinion on scoring models for long beta. Scoring models for long beta. I'm going to tell you, I never heard of that. What's a scoring model for long beta? When you say long beta, do you mean a long position in beta? Or do you mean a long-term holding period in beta? Like I'm going to hold for 20 years? Or do you mean I'm just going to be long? So I don't know what you mean by long beta. And I don't know what you mean by a scoring model. I haven't really heard you discuss it because I have no idea I don't know what you mean by a scoring model. What would I be scoring? You mean like building a fundamental model that looks at fundamental measures from companies? I don't do any quant stuff that way. What do you think? Are there inefficiencies in the market right now? There's always inefficiencies in the market. It's just a matter of where are they. You could say 30% of the market is inefficient at any given time. I just don't know which 30%. Understand, like, there's so much confusion about the word efficiency. Efficiency means that information gets priced in very quickly, right? And that there are certain assumptions about efficient markets. So you have markets that do approach efficiency and there are varying degrees of efficiency. And if we think that this is efficiency, you will have markets that will oscillate in and around efficiency. Some will oscillate by more. Some, may have longer periods of time before they return to this efficient attractor point. So there are normal deviations from efficiency that happen all the time, only because there are no perfect markets, because there are always transaction costs, and not everyone has homogeneous expectations, especially when you have a larger and larger retail presence in markets. So you can probably get a little bit further with behavioral finance, because that can help explain the deviations from efficiency. But there's always inefficiencies. Inefficiency doesn't mean incorrect price, by the way. It just means that available information is being priced in without any barriers. And if that is the case, and you are expecting, and you invoke homogeneous expectations that you think that the price you see is the right price, you could have a very efficient market that's incorrect. Because everyone thinks something is going to happen, and you could be that one person that says, I think you're going to all be wrong, right? That there are some situations, things, inefficiencies, whatever, that a small number of market participants know about, and they make a lot of money. It's usually the professionals that make a lot of money at the expense of the retail investor or the rookies, until they get the experience. Even if there are some, probably you won't explain them to us because you want to make money from them all on your own. I'm nowhere near big enough to absorb the inefficiency myself. There's inefficiencies every day. You just, unless you see, the thing is, it's not as if I can give you a formula to find it. There are inefficiencies I don't know anything about, because I know nothing about the securities or the sectors or the companies in which they're showing up in. Nothing at all. Probably the most recurring but unpredictable inefficiency is the behavioral inefficiency. They're random, they're unpredictable, but they do recur a lot. So if you stand ready, there are lots of behavioral inefficiencies. Coinbase, I think, is a good example of a behavioral inefficiency. They had earnings, and they killed it. I mean, for the quarter, their profit, I think, was 1.3 billion. That's almost a 50% net income margin. And they more than doubled the expectation. It was killer. And then they sold off. And Wednesday they had 2 upgrades and they sold off. Right? It's because there's this Wednesday a judge refused to dismiss the SEC case against Coinbase. Well, that's going to go away. We all know it's going to go away. Everyone feels pretty certain about that. But there's an inefficiency right there. Is it's the wrong price. It's a behavioral inefficiency. Why? Because it's primarily retail traders. It's primarily weak hands, and to get them out, you just need to start some selling, and they will jump ship. Uber had the same thing. After earnings, it took a dump down to just a little under 65. You look at they go, that's the wrong price, guys. But you'd have to know something about those particular things. If you didn't know anything about Coinbase or anything about Uber, you never would have recognized the inefficiency. And there's lots of those that show up. Lots of those. Another behavioral inefficiency is the combination of a jump in price along with a jump in volume. So you see a stock that does this, that usually continues. It continues on. It just continues to drift higher almost all the time. Why? That's a bit of an inefficiency. It continues to price in the same news again and again and again. That doesn't make a lot of sense. If markets were truly efficient, prices would reflect all that information right away, but it doesn't. It prices it in over a period of time. So a company that has some fundamental momentum, it has a great day on earnings and it pops. It may pull down like this, but it tends to drift and continually price it in. Why? Why would you see that? Another good example is a closed-end mutual fund. You can see what the mutual fund holds, and you can calculate what the net asset value is. But it can sometimes trade above net asset value or below net asset value or above. Why? Why trade at a premium to its net asset value? A open-ended mutual fund will always trade for net asset value. Why trade at a discount? Why trade at a premium? That, to me, seems like an inefficiency right there. There's lots of inefficiencies out there. But unless you educate yourself as to what something is, you're not going to spot something that is inefficient. So this is an inefficiency when you don't price it in right away. Coinbase, you may say, well, that's efficient. The market is pricing in information, but then you can work on the efficiency doesn't equal correctness argument, is that the crowd is wrong. Maybe the crowd has homogeneous expectations, but they're wrong, and you can bet against that. I have no problem. There's nothing that I can hide that I don't want anybody knowing because I want to make money off it. There is nothing that I can hide, and in fact, I do not want to hide it. If I want to make a lot of money, what I want to do is take a position and then tell as many people as I possibly can about this thing. If I had billions and billions, and let's say that I had an algorithm that suddenly figured something out, then yeah, I don't want to tell you. But I'm nowhere near that. How do you think Canadian oil will clear ex-American demand? How Canadian oil will clear? Oh, will sell without American demand. Trans Mountain Pipeline, West Coast not yet fully complete, taking 12 plus years. Pipeline through the east is not as clean cut as it seems. Well, yeah, there is that problem, but here's the thing. We can send it to the U.S. So as far as trying to get this pipeline across different lands and getting different stakeholders to agree to it is a tough thing to do. But if you have no choice, hey, listen, we have no choice. We got to go through those mountains there. We got to go through those prairies over there. We have no choice. It can't go south. We have no choice. Things tend to get done with a little bit more urgency when there is no choice. But when there is a choice, well, there's no rush. I don't want it going through my land. You go around. Well, we can't go around. And if we don't go around, then all these people get laid off. And if they get laid off, you guys are going to suffer really badly. Say goodbye to your revenue. Well, suddenly that has a way of focusing attention, right? Going on any podcasts or news shows, no, that's not my thing. There is a certain YouTube crowd that really looks for that. I don't have to mention any names. I'm sure you know who they are, and they go on everybody else's podcast and they take every opportunity to show up everywhere they possibly can. It's not my thing. I have a very specific audience. I don't know that I really want a mass market audience. No. When will live sessions resume? I'm only going to do one a month. The next one I'll do from Costa Rica. I deduct you see this argument play out. I deduce you see this argument play out relatively quickly given your market positioning. Any concern about U.S. economy continue to surprise on the upside? I don't think it's a surprise anymore. It's more of a, a continual grind. They just keep performing. Um, no, no, no. Companies are reluctant to cut jobs. Not now. Not now. How many, like, what was it, Southwest? Never laid off before. Now they're cutting, what, 1,750? Um, who was it? There was another company I heard today that was cutting a whole bunch. That was rare for that company to cut too. Companies are reluctant to cut. No. Wealth effect coming from the stock market likely to be maintained in the short to medium term because of AI. And house prices rising because of low supply. Houses aren't really selling. There's it's one thing to say my house is worth 1.8 million. It's another thing to get somebody to pay you for it. To actually give you money for it, and to turn it into money. No, I'm not seeing it from the houses. In fact, I think the NAR, National Association of Realtors, reported that December was a record for people pulling their house off the market because it wasn't selling. There's a lot of supply showing up now. So mm, I think you're making broad statements and then marrying them, to get a level of comfort. Reluctant to cut jobs, that's just not the case. Wealth effect coming from stocks, likely to be maintained. Short to medium, I don't know what that means, because of AI and housing. Are you sure? I would, if you came to me, if I were, you were the trader and you were coming to me with this, I would say, what evidence do you have of all of these statements that you just made? I mean, you're saying these statements. Back it up now. I don't know that you can, to the degree that gives you this comfort. Not sure if I agree with you on tariff section. CAD consumers too weak to really keep up the national. Okay. Excited about Discord. I'll be a new user of Discord, so I'm not at all familiar with the platform. Are those that are a part of A2 or A3 level able to get invites in A4 as guests to listen and ask questions? No, A4 is not a secret door or anything like that. It's just a space where people who couldn't contribute can contribute, but it has to be invite only. But it's not as if there's some secret conversation that would be going on in there. Gold, there are reports of extended delivery. Okay, we already talked about this. Thoughts on securitized space right now? No, that's just way too broad. It's like saying, what's your thoughts on oxygen right now? I don't know. It's good to breathe. That would have to be narrowed down a lot. What are my thoughts on the securitized what? Yeah, that's way too big of a question. Insurance stocks have been selling off. Does this have to do with higher rates, lowering policy liabilities because future payouts are discounted at a higher rate? Well, the that's not for property and casualty, right? Property and casualty is undiscounted. The liability, the policy reserve is undiscounted. Life insurance is discounted, but it's discounted at the return of the asset. So no, I wouldn't say that's that. If you're looking at insurance, I don't know that it would be life and health. I think it's probably property and casualty, and that has to do with their exposure to California. Some insight into AG and CN preferred shares. Pretty foolproof investment for the next 5 years. From what I can see, dividend payout is a floating rate consisting of 3 month CME term SOFR plus 0.26 plus 5.11 for roughly 10%. Virtually little and no fluctuation in share. Well, there wouldn't be fluctuation in share price if you have a floating coupon. You're not going to get a fluctuation in the price. You're basically getting the coupon. Yeah, and it'll be 25. It'll always be 25. In addition to being insured by government. Well, the MBS are insured. Well, you could say there's a de facto guarantee by the government on the MBS, but not on agency. Agency's not guaranteed by the U.S. government. It can still mismanage itself and fail, right? Eliminating credit risk. I wouldn't. No. There's still. You still have the risk of agency, right? Higher capital structure. Very healthy common dividend acting as a buffer. As for interest rates, 3 months SOFR forward, 5 next year seems priced around 3.9 to 4. Yeah. Well, you're buying it for the income stream, right? That's what you're buying. There is no capital appreciation on that, whereas with the equity, you get the income stream, but you do get volatility, but your capital gain has to come from volatility. No volatility, there'll be no capital gain. When it does perform. Well, if it does perform. How will be invited over into Discord? If you are in the applied level, you'll start to see it near the end of this week. For YouTube, it'll come later on, but it'll be an open invitation on YouTube. Everybody coming over will have no permissions. You'll have a role, but no permissions. And then I'll be sort of starting from the top on down, that anyone who has certain qualifications, you can board the plane now. Meaning that you just send me an email highlighting your qualifications, and then I will upgrade your role so that you then can contribute in the channels. Trump's first term thought he was going to try and renegotiate the debt and force haircuts similar to what you'd see in real estate. He's not going to do that. Nope. I recently heard Jim Bianco talk about Trump possibly forcing debt holders to change to 100-year zero coupon bonds under some forced restructuring. I doubt that. I doubt it. I really doubt that. Does Trump even know what a 100-year zero coupon bond is? Does he even understand the math of that? I doubt it. That is no, I doubt it. Trump threatens. He doesn't. I don't think he would do that. I don't think that's on his radar. And even if somebody presented him with that, he'd say, "No, I don't need to. No. They'll just do it. They'll just do it. They'll just do it, or they'll get punished. They'll just do it. You don't have to get fancy." Trump wouldn't get fancy like that. He would just threaten and see what falls out. I think based on the fact that 75% of U.S. debt is held by U.S. persons or entities, 75? I don't think it's that high. Say somewhere around 60. This would do little for the U.S. other than destroy its ability to borrow. How? I don't get that one either. I don't see how you got to that conclusion. Help me understand what's the consequence of such an action. It wouldn't happen. No, nothing like that is going to happen. Nothing at all. A4 invitation. Can A3 person contact A4? Or A4? Well, if you're A3, let's say you're an A3, that means you can look at everything. And you can contribute to everything if you want. But your compliance department may say you cannot contribute. That's why I would make you A4, and then you would only be contribute in the A4, not because of any restriction I place on you, but because of a restriction your compliance office placed on you, that it must be in an invite-only environment. So A4 is just anybody in the applied level who cannot comment publicly. Market outlook becoming paid content? Nope. Or you mean I need free account to watch it for free now? That's it. That is it. It's a free account. That's all it is just a free account. So all of this stuff that I do, this market outlook, it's all free. I don't charge for it. I've been doing this for a number of years, and you get it for free. In fact, there's no advertising on these videos, so there's no monetization on them at all. Right? So all I'm doing is saying, look, rather than watch it here, come on over to mm.com, set up a free account, and you can watch it there. In fact, you can even download the app, and you can download the Market Outlook into the app to watch it offline. Right? I can't do that for you with YouTube. Now, maybe you have the ability on YouTube to do it yourself, but I can't give you that ability. That's all I'm doing, is I'm just moving it over there. Right? I don't think I'm asking very much to move you over. It then starts to give me an idea of, YouTube says I have 205,000 subscribers. Do I? Because that would mean that I should get close to 200,000 views on every video I put out. Or let's assume that only 20% watch. I should get close to 40,000, but I don't. This will give me a better idea of the level of engagement that I have, so that I can modify what I do, or try different things. It's all free. I hope you're not going to complain that I got to get my free stuff by clicking one more thing. Ugh. Like, it's all free. It just is on a different site, that's all. Well, I mean, the longer part will be on a different site. And I want to put you in the same place as level 1 CFA content. Now, it's from 2018, but it's still there. So think about this. I mean, I could, let's say that my YouTube video only played if your device sensed that you were in a library, right? So that means that you cannot watch the Market Outlook unless you're in a library. Or try this, unless you're in a gym. It only plays if you're in a gym. Well, that's half the battle. I got you into the gym. That's half the battle. Now that you're in the gym, you may as well do something while you're there. So if the full thing only plays when you're in the area that has the CFA content, even though it's from 2018, it's still very good. That maybe you might watch a couple of videos. Maybe you might start watching one of the fixed income videos and goes, oh, is that how bonds are priced? And you might pick up a thing or two here or there, right? Half the job is getting you in the right location. If I can get you in the right location without all the other distractions of YouTube and get you into that location, your attention span might be better in watching that video. And you might look at the library of other videos and say, oh, this looks interesting. Alternative investments. I wonder what this is. And you might start watching it. And you might learn one or two things. And who knows, you might go through a few and say, this is not bad. And you may otherwise never have considered the CFA. You might say, you know what, I can do this. Right? So I'm trying to get you into the gym. It's a mental gym, but it's still a gym. That's all still free. I'm not selling you anything. I'm not forcing you to buy anything. You don't have to spend a single penny. Just come into the gym. That's all I'm asking. Just step into the gym and see what happens. Once heard Larry Summers state 3 necessary conditions for reserve currency: large current account deficit. Yeah, you would need a current account deficit because you would have to have a capital. You're obviously selling your capital somehow. Stable political system, yep. Strong economy. A stable currency. At least 2 of the 3 are at risk. Which 2? At least 2 of the 3 are at risk without telling me which, unless that's the joke. Unless 2 of the 3 are at risk and you got to figure out which 2. It's like saying, it's, you guys are the smartest people I know, at least half of you, without saying who the other half are. Want to protect the dollar's reserve currency status. I wonder why they are pushing the closed trade deficit. Because Trump is stupid. I mean, if you accept as your premise that Trump is not a bright man, a lot more things make sense. Instead of trying to figure out what the 3D chess game is, understand he's not playing 3D chess. He's not playing 2D chess. He's not playing checkers. He's relatively a unintelligent, massively uninformed, and not curious individual. He is willfully uninformed. He doesn't want to know. He thinks he knows it all. He doesn't need to know anything more. He's smarter than the generals. He's smarter than the economists. He's smarter than the central bankers. Anybody who starts telling you they're smarter than all those people doesn't know what the hell they're talking about. He's generally a very stupid man. Don't try to think, well, how are you going to get this done with doing this? What am I missing? You're not missing anything. He's stupid. He doesn't understand. And if you start with that, you can then make better trades, because then you'd say, there's nothing going on. He's just a stupid man. He's just a stupid man. It's refreshing when you finally come to the conclusion he's just a stupid man, because there's nothing to figure out. He's just a stupid man. Why they're pushing to close the trade deficits? Because Trump is stupid. Does anybody understand that? What you have in the administration are what are called sycophants, right? Sycophants are people who seek curry with those who have power, who have money, with insincerity. Like, I think most of the people around him understand that if you flatter him and you kiss his ass, you'll be near him. You'll be near him to hear what he says in private, so you can do things that make you money in public. Right? And if you're in his good graces, chances are you'll get away unscathed. But you're there to make money. So you want to be in the room when he starts talking, oh, I'm going to do this, I'm going to do that. I'm going to say it at noon tomorrow, so that you can make your money before him. And that you can write your book after, and you can go on speaking tours to tell people what it was really like in there, right? Nobody's going to tell him anything. And if anyone tells him anything, he's not going to listen. There's a website out there called Psych Hacks. P-S, I'm going to try to spell it, P-S-Y, Psych Hacks. Psych Hacks. Google that. It's a psychologist. He's sort of like a realist street mart psychologist. Really good stuff. Actually, he's got a really good interview on White Soft Underbelly. If you ever watch that channel, that is such a cool channel, White Soft Underbelly. This guy here, he says he explains why really beautiful girls are crazy. And it helps you understand why Trump can sometimes seem crazy or stupid. His theory here is that these really beautiful girls, from the time they were in high school, tweens and then teenagers and then into their 20s, boys and men want to be around them. So they'd say whatever they had to say. They'd do whatever they had to do, so that they never hear the word no. Much, when you're younger, you hear the word no a lot. You learn to deal with the word no. But imagine never hearing the word no, that no one denies you anything you ask until, you're in your mid-20s or 30s, and then somebody finally says no to you. Well, you act like a child because you never learned how to deal with it. You ever tell a 6-year-old, no, you can't have another cookie? They throw a little fit. So this psychologist is saying that's what you get when they're 29. They're still 6 years old in their mind when they hear the word no. So that's why they seem crazy, is because they throw a little fit. like a 6-year-old. Well, Trump is not used to hearing the word no. So because no one ever told him no. No one ever tells him no, because they know what he's like. So he never hears the word no. And even those around him, they know what he's like. They'll not tell him no. They'll not tell him no. So no, he has no one around him. Who was another? There was another. Oh, whose was it? It was. I want to get the name right. I don't want to take credit for it. It's a journalist, and he described the Republican Party as NPCs. Such a common name, and I forget it now. But he described why they are all NPCs. NPC stands for non-player character. So if you're ever playing a game, you come across these non-player characters. Trump is the player. The Republican Party are all non-player characters at this point. And Trump is not used to hearing the word no. And when he does hear the word no, he throws a little fit like a 6-year-old, like a crazy girl. He throws a fit. And everyone knows that. So no one tells him anything. So no, he has no one around him. World War II, persecution of Jews was a horrible crime. But if we're to consider H's war strategy only, his greatest mistake was to go in the Soviet Union. His greatest mistake was to open up a war on two fronts. You're absolutely right. Even greater blunder was to declare war. Well, even though he did this, his big mistake here, number one, two fronts, the big mistake he made was holding back from Moscow. I think they were within 100 miles of Moscow, and he said, no, hold back. Go after the oil fields first. And that was his downfall. That was a strategic mistake. He could have walked right over Moscow at that point, because Stalin was caught on his back heels. Could have really walked all over it, but wanted the oil fields. Thought that if he got the oil fields, he could squeeze off Russia really easy, or USSR. Even greater blunder was to declare war on America. Yep. And pull the, yeah. It is also possible, and this is all part of a genius strategy. No, it's not. No. If you think it's part of a genius strategy, you're always left guessing. You're always left guessing, and you can't take action. If you assume that the simplest explanation is the most correct explanation, is that he's just an idiot, then any market dislocation is a buying or selling opportunity easy. Because you go on the premise that there's nothing higher level going on here than an old man's stupidity. That's all. Continuing with the real agenda behind the scenes, which is to make the government. No, I don't think that's going on behind the scenes. That's going on right in public view. Executive order after executive order in full public view for everyone to see. They're not hiding anything. That's not going on behind the scenes. That's going on right on public display. This is an inexperienced, they're not politicians. Okay, so we'll give them that. They're not politicians. They don't really understand the impact of what they're doing, and they don't really care about the impact of what they're doing. They just want things gone. I want this gone, this gone. I want this, I want that. I want Gaza, I want Canada. I don't want this, I don't. Everybody gets tariffs without thinking through what you're doing. As of right now, you have a world that is coalescing against the U.S. And the more he pokes his finger in people's chests saying, you will do this and you'll do this and we're going to take this from you and you're going to bow down and you're going to kiss the ring and you're going to, more and more and more are going to go. He will destroy. I shouldn't say he will destroy. He's dangerous to no one but Americans. He's not dangerous to the world. In fact, he's probably, I'll go ahead and say this, he's probably the savior of the rest of the world. He's very much a Christ figure in this sense. Because what did Christ do? He sacrificed himself for the sins of everyone else. He sacrificed himself. What is Trump doing? Sacrificing America for the savior of to save the rest of the world. Because Europe will coalesce around themselves and become strong without the US. Canada will lean more in towards Europe and away from the US. It will force Canada to deal with its inter-provincial trade barriers, which it never had to before because it didn't have to. So once daddy takes away the credit card, everyone else will stand on their own until they no longer need daddy anymore. And then what's dad going to do? Right? You can think about Cats in the Cradle when the son came home from college and he didn't need his dad anymore. He said, what I'd really like is to borrow the car keys. Dad, I don't want to sit and talk with you. And then dad calls his son up. He says, oh, come on, man, the new job's a bitch. The kid's got the flu. But hey, listen, nice talking to you, but we'll get together someday. We'll get together someday. No longer needed the father. That's what the world is going to come to. They'll no longer need the father. So if anything, you could, in a very broad narrative sense, cast Trump as the Christ figure who's going to save the rest of the world by sacrificing America on the cross. Wow. That's some heavy stuff, huh? Yeah. Cutting spending in one area while handing himself a $400 million government contract for Tesla vehicles is not... I don't think he did that, and that's gone. I don't think he did that. I don't think he handed it to himself. $400 million, by the way, is nothing. Given the size of Tesla, that's nothing. That's inconsequential. I don't even think that's 1% of their annual revenue. It's really nothing. And I believe that has been canceled. That is gone. Pessimism towards U.S. equities due to tariffs, but could you also argue that the U.S. will win the AI arms race, which would lead to higher productivity and more growth? Is America in the AI arms race? Or are companies in the AI arms race? I don't think the U.S. government is involved in this at all. These are capitalist, free market companies that will sell their product to whomever. This invented in America doesn't mean it stays in America, right? So I don't know why an American company creating some AI tool means only America has it. I think the spillover there is huge. I think the knowledge spillover there is extremely huge as well. White paper after white paper after white paper. What do I need your tools for? No, I don't know that it would just be American companies that would be productive. If Google has this great technology or Meta has this great technology, why wouldn't you sell it to every company, no matter where they were? I don't know that this is just, it may be born in America, but, it'll live in the world. Unless you think that there's some reason why it will only belong to American companies and never spill across a border. Hello, Mark, many thanks. And I don't want to be rude, but chopping the market outlook and splitting the applied level into 200-300 isn't fun. The market outlook continues to be free. And understand that I am a business like any other business. And what I do is I started my pricing at a very low price. And at that time, I was very clear that that price was going to rise over time. It was going to rise over time. There is a cost to delivering education. It is not free. You need a website. You need IT. You need support. Amazon wants to get paid no matter what. Your staff wants to get paid. Not only do they want to get paid, they want raises every year. Everything costs money. Everything costs money. Everything costs money. And even when you look at what I'm delivering you, let's have a look at sector studies, for example. Well over 100 hours in there and still increasing. I plan to continue to add 80 to 100 hours of content every single year. you can think of that as the dividend on what you pay. So it's an increasing dividend over time. But I'm not charging for the market outlook. I'm just asking you to watch it in another place that benefits you, or at least I'm hoping the spillover benefits you. And the applied level into two sides is $4.25 each side. If you're in the CFA family, you save $100. If you're in the MM family, you save another $50. You're down to $275. For what you're getting, divide 275 by the number of hours of content that are in there, and the number of content hours of content you'll continue to receive. I'm still massively underpriced compared to what I see other people doing. For example, in the applied analysis, you have financial modeling, a full financial modeling course using a real world company, Costco. I see other companies out there selling their financial modeling for $4.95 using manufactured data. And it's 8 to 10 hours long. Maybe I saw one kind of pushing up around 15 hours. Mine's 20 hours, pushing to 20 hours using real data. And it is already wrapped up in the $4.25 price. And not only do you get the financial modeling, you get the sector studies, you get understanding gold mining, understanding copper mining, understanding utilities, understanding semiconductors, a 5-part series on understanding banks, 3-part series on understanding the Fed, understanding timber REITs, residential REITs, office REITs, what else did I do? Retail REITs, industrial REITs. What else is in there? Understanding telecom, understanding automotive OEM. And now I have an author. Oh, I shouldn't say an author. He's just taking my videos and the notes and writing chapters around it, so that by the end of the year I will have a series of PDFs that go with these. You could pay $4.95 for financial modeling, or you could pay $4.25 for financial modeling plus all of that other stuff. If you're in the CFA family, you pay $3.25 for it. If you're also in the MM family, you pay $2.75 for it. Or you can go to Wall Street Prep and pay $495 for financial modeling and get manufactured data. I know nobody likes to see prices go up, but if you really compare what I'm giving you with what you would pay somewhere else, and I've always priced my product this way based on cost plus. That means what does it cost me, and then add a margin to it. Whereas other companies have value-based pricing, which means they figure out how much value are you going to get, and that's what I'll charge you. Regardless of what it costs me, I'm going to charge you for the value you derive. I don't agree with that. The value you derive is what you derive. But yeah, prices do go up over time. Market Outlook will still be free. You'll still be able to communicate on Discord, but on Discord now, your role that you're assigned, will designate your qualifications. So what I've done with YouTube is it's A1, and there is white, depending on the color of your icon. There's white, there's green. You see if somebody can tell me where I got this from. There's blue, and there's black. Where did I get that color scheme from? Maybe somebody out there knows. And anybody with a black dot has a lot of qualifications behind them. So that while you're going through the comments section, you can scan very quickly and say, I'm more interested in what the black dots have to say. Now you're getting a comment section that is weighted by the qualification of the author of the comment. And you know that person comes heavy. So they're really worth listening to. So you can scan and say, I'll read the blues and blacks, but I'm not that interested in the whites. Right? Hopefully what this does is the whites then say, well, how do I become green? And the greens say, well, how do I become blue? Right? So what I'm doing, I think, is a good thing. I should get a medal. Bitcoin has been a good proxy for risk 10 years ago or even 5. Yeah, I don't know that it was large enough. To be clear for everyone out there, I don't believe in Bitcoin at all. I think it's a big pile of nothing. I still think it's a big pile of nothing. But I also think it's got a big crowd that believes it's a pile of something. I'm not playing Bitcoin, I'm playing the crowd. I'm playing the size of the crowd. As soon as the crowd starts to shrink, this thing goes straight down. But I'm just playing the crowd. I say it goes straight down because there's nothing there. There's nothing of intrinsic value behind this thing. And before you start putting comments telling me what's there, you're farting in the wind. I'm not even reading them. You're wasting your time. As soon as it comes to, oh, it has the net, I just jump right over them because I think I don't care. I don't care. I think there's nothing there. That's my model. Fed will prioritize unemployment mandate over price stability mandate. Meaning the Fed will be okay with lowering interest rates in response to unemployment ticking up even if inflation remains elevated. I'm not sure inflation can remain elevated while unemployment goes from, if you see it go 4.2, 4.3, 4.4, 4.5, 4.7, 4.9, that is aggregate demand coming offline. I'm not sure companies can continue to raise prices in the face of aggregate demand coming offline. So I don't know that you can get both, but yeah, I think they would move to the full employment mandate very quickly. Potential stagflation in U.S. or resurgence inflation. Well, I don't think you're going to get any of that because I don't think you're going to get tariffs. I think it's just a lot of bluster. I don't think he has the courage to do it. And if he does do it, he's going to get hit. At least America will get hit a lot because there will be retaliation. Call that 100%. So you're going to get into a fight, but you're going to take a couple of shots to the head at the same time. Bullies don't want any threat to their power. Bullies want to intimidate and they want to see cowardice. They want to see fear. Bullies don't bully scrappers. Even if they can beat up the little scrapper, they don't bully little scrappers because they know they got to fight, and a bully doesn't want to fight. That's the way I see this. These tariffs aren't going to come. There isn't going to be inflation because of the tariffs. They'll be used in a relatively few places. China probably until he's face to face with Xi. Trump is not a brave man when he's face to face with someone. He's pretty much a coward. He's only brave when the person's not in the room. So my thinking is most of this isn't going to happen. So I'm not too concerned that you're going to get rising unemployment just with these government cuts. This is going to start showing up. Like I said in the market outlook, start watching initial jobless claims because it'll start to show up there. List of books on topics and applied series you would personally recommend. I wish there were books. It'd make my job easier. Almost everything had to be put together from little snippets here, little snippets there, reading 10Ks, finding a small report on this industry with a couple of sentences that, okay, well, that fits here, that fits here. It's a lot of source material that you have to go through to put that together. They don't necessarily go into depth, and I know it would take you days to record it. Because of that, I struggle to formulate they're meant to get you 80% of the way there. You can get to 80% in a lot of fields in a couple of weeks. Getting from 80 to 100 takes 5 years. There's no way I'm going to get you to that level in 136 subsectors. It's just not going to happen. I see my job as getting you to 80%. And then the other 20%, like I say, that's going to be 5 years to get the rest of it. So you have to pick one, and then you must take it from there. I struggle to formulate my own ideas and opinions. And it mostly based on what you said. Well, you got to take it further. So maybe you watch Understanding Bitcoin Mining, and then you go to a couple of the Bitcoin miners, and you then take it deeper, right? You then go a little bit further. You got to do your own stuff. I got you 80% of the way there, such that when you open up, Core Scientific's 10K and you start reading it, you go, okay, I'm familiar with all this. I know exactly what they're saying. But then you have to make up your own opinion about, well, do I like this company? You have to then decide, well, do I even like Bitcoin miners? Do I even agree with this whole thing? Given the cost structure and the funny economics of Bitcoin mining, all of this is destined to end badly and end up being in the hands of just a couple of companies that will basically earn their cost of capital. There is no growth here. This is a race to utility style returns with a few dominant players. Many of these will disappear. You just got to make up your own mind about what you like. You got to take it further than where I am, and you have to live with it for a while. You can't watch something, 2-hour video and say, okay, now I get it. You got to live with it for 2, 3, 4 weeks, a month, 2 months. You gotta immerse yourself in that subsector, and then you'll come out of it knowing more than what I know. But I got you 80% of the way there. I saved you 3 or 4 weeks of research in figuring out what all of that stuff meant to begin with. Now you do the deeper dives. Studying your material, I would like to get the depth in each topic by reading specialized books. They don't exist. They really don't exist. I know people personally who are planning to boycott U.S. brands altogether. Yeah, it is a big thing in Canada. More than I've ever seen. It is a big thing. Not sure if I like the new setup with Discord. If I understand it correctly, I don't want to be on Discord. I've been a subscriber to Applied Series since day one. Enjoyed just opening up YouTube to watch Market Outlook. Audio only with Firefox browser. Well, you can use the app. You can download the Market Outlook into the app, and now you don't even need to be connected. You can have audio only. Yeah, I know. I know people hate change. And they don't really like change that much, but it's just a necessary evolution. I have to. Let's see if I can do this better. There's the video, and then there's the comments. I'm of the belief that there is just as much value here as there is here. 50-50, but not on YouTube. On YouTube, it'll only go so high. The comments here are good. You can see that I'm reading good comments because I've gotten rid of a few that only insult people. Oh, this is a stupid argument. Delete. I get rid of that stuff. But I want this over here. I think is because look at all the good questions we have here. I mean, these are all really good questions. What if we could elevate these a little bit more? What if there could be more to it than this? How much information can you get out of these comments? You know what I see younger people doing? They'll watch a video. I say, you got to watch this video. It's really interesting. It talks about XYZ. And it'll play, and then they'll start scrolling the comments, and they'll start reading while this is playing. And they start reading the comments. Well, aren't you going to watch the video? I can get a feel for it in the comments. Like I'm getting the commentary in the comments while I'm hearing the video. Okay, well, I wouldn't do them at the same time, but I get it. I want to elevate this. I want this to be just as valuable as this. I don't think that I can get it on YouTube. It's not the same. Look what I'm doing right now. I'm reading your comment and I'm answering. If this were on Discord, it would be in the video channel where I'd be doing this, and I would say every Tuesday night, I'm going to answer all the questions in the comment section. And if you were there and I go, okay, I don't understand this question, I would see that you're online, and I can open up the microphone and you could explain to me a little bit more about what your question meant. There's this give and take all of a sudden. You get that? This doesn't happen here on YouTube. It's me staring at my blue snowball as if you're right in front of me, with that head tilted sideways, with the eyes open like a professor looking at you, like going, you know what I'm saying? And it's just a microphone. Imagine if it were another person, that we could actually trade back and forth. We could talk back and forth, and oh, that's what you mean. Okay, here you go. That's what I'm hoping to get to. I think the conversation, if I take all of the comments here and we weight them by the qualification, the conversation, the level of conversation would increase. Not only that, it would drag everybody upwards. I've seen that, right? Depending on where and what type of room you put someone, will dictate in large part the direction that their behavior will drift. We drift in the direction of those we associate with. So if I can concentrate the qualified comments on Discord, think of what that could be. I think there's a hell of a lot of value here, because you all have, for the most part here, these are all really good questions. Well, what if you could express them with more words and lay out your argument? Think of how interesting and exciting that is, to hear 50, 60 different arguments that night, all from well-placed people. I think that would matter. So don't judge yet. Don't judge yet. Do you do your own analysis and then listen to other people for perspectives? Pretty much. I always listen to what other people have to say. What should we do? Well, don't outsource your thinking. By outsourcing your thinking, I mean you listen to somebody, you say, okay, that's my opinion now. You want to be able to formulate your own opinion, and then you listen to the input of others, because maybe you missed something. Maybe you got a blind spot. Maybe you hear somebody talking, oh, I didn't think about that. Oh, that's true. Or you listen to somebody go, okay, no, that doesn't fit. That doesn't fit with what I know. That person needs to do more research. Or you can spot people who are just repeating stuff they heard somewhere else themselves. It's a coevolution. You do a little bit of your research, and when you're doing research, well, it's going to be what other people wrote or what other people said, and then you'll listen to some other people, then you'll do some more of your own research, maybe read a 10K, and then you'll listen to other people, and other people got things to say. You can get good information from other people, but it's a coevolutionary process. Scrolling through some of the pandemic year videos, the channel has grown considerably. Yeah, that it has. Would you consider any videos, exercises in dissecting equity analyst reports? Perhaps on stocks you have in the positions video. Not for the purpose of recreating the financial model, but more so for understanding the sell side sentiment, associated company specific success metrics. Oh, you mean how they're presenting their case, what their case is? Usually, their very first page, their executive summary, they list their case, and there's 4 or 5 bullet points. Usually, the first page has everything. Like the first page or 2 is where they tell their story, and then it goes into a whole bunch of all the supporting documentation behind it if you want to go deeper. But with every analyst report, usually you can get it in the first 1 or 2 pages. My MBA program had access to a plethora of research. Potentially dangerous given the incentives. Well, you have to understand that they're usually trying to get something done. They're usually trying to tell some kind of story. But again, if you read them, the first couple of pages tells the story of what narrative that they're going with, what story they're telling. And it usually has, what they consider the big catalyst. This is on the horizon. This is on the horizon. This product is in the pipeline. It should provide this much growth. Then you could say, well, do I believe that? Is it going to provide 20% growth by the third quarter? Is it really? I mean, maybe it will. Maybe the company is one that you say, okay, well, they've always delivered in the past. I don't know that this isn't been on my list as something to do. Some people like me won't go to the websites. How about putting both short and long versions on YouTube? But why? Why put the short and the long version on YouTube? Why not just put the long version and then not put it on the site? And then why do anything at all? No. I have a plan, and I'm moving forward. Now, you may not want to come along, and there's nothing much I can do about that, but I know what I want to get done. So, with the repetition, a lot more users end up going to the site. With the scarcity, a lot more users will be going to the site. How has your views on duration assets changed over the past month? They have not. Do you view IWM and IJR as benefiting a lot over the next 2 to 3 months? Nope. No, I think I've been clear on that. If you were American, would you have voted for Trump? Yep. Didn't know you could get washing machines from Amazon. Yeah, you can. You can order them right from Amazon. You can get all sorts of things. Do you think tariffs will move manufacturing into the U.S.? Some. I mean, there's always, if you have a room of 100 people and you threaten them all, 20 will give up something, right? 20 will give up something. You'll get something. But that's as far as Trump thinks. Okay, here's 100 people. 20 will give me something, I win. But what he doesn't think is the retaliation of the 80. In his mind, there is no retaliation of the 80. They'll either take it or they'll give up something. But it's this idea that everyone is helpless against the U.S. and everyone will just take it. No, yeah, if you threaten 100 people, 20 of them might give you something, but the 80 might storm the castle, right? So that's all he's thinking about is anyone going to move to the U.S.? Some will. But what's more important is what is everyone else going to do instead? If 20 move manufacturing to the U.S., but 80 decide, okay, well, let's just divert trade to other places. It will actually be worse for the U.S. So it's, it's not what will come to the U.S. Don't worry about that. It's what's going to be the level of retaliation. That's the more important thing. I've heard that argument. To me, it never made sense to move manufacturing because of the tariffs, especially with the distrust. Well, that's exactly it. I mean, how do you know he's not going to change the deal once you're there and say, oh, you're a foreign company operating here, now you pay higher taxes, unless you sell 50% of your business to an American company? Like, you can't trust this guy. I think everyone knows that. You can't trust this guy. He'll renege on a deal the very next day. If the very next day he finds himself not winning out of the gates, he'll just change the deal. So I don't know anybody that's going to make multi-billion-dollar investments in the U.S. when this whole thing could go away in 4 years, when it can go away in 2 years, right? If he doesn't keep the Senate and Congress. Do you think Elon can make a big enough dent in the budget? I don't know. Not for lack of trying. I mean, he's certainly going to try. I thought that the 4 biggest spending items are military, Medicare, Social Security, and interest payments. Yeah, I think they're going after all of it. I haven't heard him touch any. Well, I think they're looking at military next. NASA's up, looking at the military next. Yeah, they're going through everything. Mark Schmale from Fidelity said he just followed the Trump playbook from his first election and is up 20% since he was elected. In his mind, just wired differently. In his mind, just wired differently than a normal PM. All 3 of his funds have substantial outperformance, and he was doing this for 18 years. He seems to identify as a momentum investor, and some people just, well, I mean, that's with Trump, it's as simple as it is. If he says that he's going out for ice cream, he's going out for ice cream. It's not a signal. It's not anything. It means nothing. He's simply going out for ice cream. Period. Take him at his word. He's not playing any game. He will threaten to get what he wants, and that's as far as it'll go. And sometimes he'll win, sometimes he won't. But even when he doesn't win, he will come out and declare victory anyways. Trump always wins because he simply just declares victory, whether he wins or loses. But just take him at his word. He does want to put tariffs on, but he won't. He does want Canada to be the 51st state, but he won't use the military. He does want Gaza for himself, but he won't use the military. He has no layers. So if you adopt that model of him, you'll find that everything, the trades just show up, and you don't even have to think about them anymore. If he says tomorrow, I don't like a strong dollar, short the US dollar. Just short it. Can he get anything done about the US dollar? Probably not, but he'll start threatening a whole bunch of people about the US dollar. Just short the US dollar right away. Don't even think about it. He's not playing some game like he wants to bring people into a trade and then squeeze them and then crush them and make a bunch of money over here to do this so that he can get this agenda done behind this. He's nowhere near that level of thinking. If he says, I don't like the strong dollar, translation, he doesn't like the strong dollar. He will do what he does. He'll threaten a whole bunch of people to get the dollar down. In the meantime, the dollar will be under pressure. Just short the US dollar. Don't even think about it. Walmart's been going up. Okay. You think the Fed might be considering that rate cuts aren't going to impact employment that much, therefore move forward very slowly with them? Well, high interest rates aren't helping housing prices. High interest rates aren't going to help insurance prices. High interest rates aren't going to help the fact that used car prices are very high because we hollowed out leasing over the last few years. Where you're seeing price increases, high interest rates are not going to solve any inflation in those areas. High interest rates aren't going to solve any inflation you find in healthcare. I think we've hit the limit of what interest rates can affect at this point. So the Fed doesn't seem to think so. That's their tool. That's the one thing they have. If they see their full employment mandate under threat, I think they'll move in. Yeah. My thing is that just like supply side inflation, the Fed can't do much, and likewise unemployment caused by tariffs and deportations won't be helped by rate cuts. Well, what rate cuts will do is spur investment. So there might be a whole bunch of investment sitting on the sidelines saying, oh, these high rates, I'm not investing. And then you get low rates, oh, okay, let's invest. So there's always that argument that, you can't say, well, lower interest rates, a company isn't going to say, oh, 3%, let me hire somebody. It's, oh, 3%, this project makes a lot of sense, but this project requires me to hire people. Comment. Could be moot considering we know that Powell may be subject to the bag of hammers effect, even though he says he's not. Yeah, I can guarantee Trump will blame him directly for any sharpening. Oh yeah, Trump only takes credit for all the good stuff. All of the bad stuff belongs to other people. He'll find a way to blame Biden and Obama. It was a disaster, worst. Never would have happened if I were president. That never would have happened. Last year, companies this year, in this February, you're going to find are going to have a hard time beating last year's comp because last year was a leap year, right? This year only has 28 days. Last year was 29. Even in 2020, there was a leap year. Two times under Biden's watch was a leap year. Never would have happened under Trump. That never would have happened under Trump. But that's why companies will have a hard time. That'll be Biden's fault because he was president and allowed 2 leap years to happen under his tenure. 2 leap years. Never would have happened if he was a disaster, worst deal ever. Who negotiated for February 29th? I was a stupid idiot. Obama probably did it. And Biden, I was too stupid to know. You know what he's like. You can almost hear him arguing that the leap year was a disaster. Never would have happened if he were president. Can't wait for a video on the collapse of non-existent gold. Don't know what that means. What is non-existent gold? Overregulation and interprovincial trade barriers in Canada. You see the new government meaningfully reduce these barriers. Well, necessity is the mother of all invention, right? If you have alternatives, no, they're not going anywhere. But if the alternative is looking very bad, if the alternative is we're going to suffer, you're going to make the hard decisions. And yeah, maybe interprovincial barriers are a hard decision, but if you have no choice, you'll do it. I live in Canada. I've definitely seen consumers boycotting U.S. goods and replacing them with anything but U.S. goods. Yep. If this affects U.S.-based companies meaningfully, do you see this translating to pressure on Trump? Overall, yeah. The people who are losing their jobs might have been voting for Trump. The companies that are losing sales might have been voting for Trump, saying, whoa, you promised us, good times here. This isn't good times. Trump's plan on the Ukraine and Gaza conflict seemed very forced rather than negotiated, because he just wants a victory. He doesn't care who suffers, as long as he can declare victory. He wants to end the war to say, I ended the war. He doesn't care. He doesn't care how it's ended. He's never cared about how you get to victory, only that you get to victory. That's just been his whole life. The path to victory is meaningless to him. Only the conclusion is meaningful. That's it. How you get there is meaningless. The ends justify all means. Look, we got peace. It wouldn't matter if Ukraine had 1 square meter of land left and everything else belonged to Russia. We got peace. It's the best deal. Everybody loves it. I'm hearing a lot of good things. No one ever thought it could happen. If I were president, this never would have happened. It happened under Obama. It happened under Biden. They were disasters. It almost reprints itself. You can write his victory speech for everything, right? No, all that will matter is the conclusion. Look, how can you have a discussion between the U.S. and Russia in Saudi Arabia about peace without even inviting Ukraine, without even consulting with them, saying, look, what do you think of these points, without even talking with them? And for Hegseth to say, look, to return to the pre-war borders is stupid. To join NATO is never going to happen. He just handed Russia 2 things. So what did Russia do in Saudi Arabia today? They demanded even more. Well, of course they did. I mean, a beginner in negotiations would have went into that saying, listen, they're already giving us what we want. Let's demand even more. Of course they were going to come in demanding even more. Rookies. These are rookies. And poor Ukraine. Their outcome is going to be negotiated between rookies and pros. Sergei Lavrov is not a pushover. He is very practiced and very good, and Rubio is way out of his depth. Way out of his depth on this one. Except they are charging us them. I don't know what you're trying to do, but you didn't. Except they are charging us them. Oh, okay, well, look at that. Let's pass on that. I don't have a university degree, not even a college degree. Still, I've leveled myself to a point where I was interviewing candidates with masters and PhDs on positions that I currently hold. Great. I don't contribute much to this channel, but that's because up to this point I had nothing of value to share. So you think that limiting me, or more likely someone like me from the discussion, will have some sort of opportunity cost for everyone involved? Uh, well, I don't know. You say you don't contribute, so we don't know. We don't know what value you've contributed. Um, who says I'm going to limit you? I think this question is very hard to answer, given that bots are a plague not only for YouTube, but yeah, the bots are a problem. Best I could think of is first making sure that I'm a human and banning early to incentivize control. Well, no, everybody from YouTube coming in comes in with no permissions, and then you get permissions. So this way here, I don't have to worry about everybody coming in with permissions and then getting rid of all the bots, because the bots will just keep coming in and coming in and coming in and coming in you see where I'm going with that? No matter how many you get rid of, there'll be another 100 that come in. You'll never get rid of them all. And it just turns into a nightmare. So if everyone coming in has no permissions, who cares how many bots come in? They have no permissions. And then you give permissions. I'm going to do it that way. It's Z, not Z. It depends on where you come from, right? For example, what is that? Is that a zebra or a zebra? It's a zebra, right? It's a zebra. So it depends on where you come from. Doge spreads panic among government employees in Washington. Washington region, due to this government sector, has been a great stabilizer, resilient to crisis, and even negatively correlated as the government increases aid during downturns. Now this bubble may burst, and Washington could actually become the trigger for a crash. My opinion is a very healthy crash. Oh, I was going to say, where are you going with that? So far, it sounds okay to me. You want to crash taxpayer spending. Send someone to Canada to do the same thing, line by line by line by line. I can tell you where $1.5 billion of taxpayers should be canceled right now, CBC. And I don't think I'd get anybody pushing back on that. Anybody at all. Let's do it. What else do we got going on? $1 billion for an app that never worked. Remember that one? Yeah, if he's done down there, send him up here. Usually a bubble inflates and bursts when there's no more air to push it higher. When that happens, the market undergoes a cleansing process, but solid companies also take a hit. That's true. You are going to reduce aggregate demand. This time we're starting with a cleansing, so I expect the crash to be mild and short. Maybe it won't happen at all. First time unemployment claims Washington, D.C. skyrocketed from about 500, 1780 in February 25. Last week? Oh, you're looking at last week? I think it's going to take a couple of weeks to show up because if they get any kind of severance at all, sometimes it's, if they've only been there like 6 months or something, usually it's like 2 weeks of severance that you have to give. Any kind of severance, I think you'll see those numbers increase. We're going to have to cut this off soon. I don't know how much more we have here. Oh, we're almost done. All right. Okay. I think rates will be higher for longer. Instead of TLT, I've been in TL. Okay. Am I missing something? Oh, covered calls. No. I mean, it depends on your belief and your expectation. You if you have different beliefs and expectations, then you're doing what's right for you. Explain the different rates and how they are related and who uses them. Oh, well, that's a seminar. Trump talks big like that, so when he... No, he talks big like that because that's exactly what he wants. He's not playing any game. Why wouldn't you short the S&P 500? Because it's been a death trade shorting the S&P 500. Seems very expensive. It has been expensive for the last 2 years, but it's been a death trade. Not justified anymore. Maybe once liquidity dries, yeah, it's. I'm just going to pass on the whole thing. And then we can say maybe this, maybe that, maybe this, and if rates are higher for longer, it'll do this, it'll do that, and the large caps have just said nope. Don't know what world you're living in, but we live in a completely different world. No, I wouldn't short large caps again. It's just a death trade. Canadian spirits rise to fight the bully on myself. I'm an immigrant here, but I too feel the sense of pride. Can imagine what citizens must be feeling now. I mean, how many people cared about Canada just a few months ago? Well, how can you care about Canada when you have a prime minister telling us how racist we are all the time, right? I mean, how can you like the country when you have a prime minister that just embarrasses you on the world stage? I mean, it's hard to stand up and say I'm Canadian when you have such an embarrassment for a leader, when you have a country that is getting poorer by the day, GDP per person just dropping, policies that seem to just promote the Trudeau brand and fuck Canada, screw Canada. This is brand Trudeau, this is Trudeau land. It's hard to be proud of something like that, but a crisis, sort of puts things in perspective. A common enemy. So many great researchers in this country of just 40 million. US must know that they can print as much as they want, but they can't print resources, which Canada has. I think this moment will stand as one of the most critical periods in history of Canada. If we can get rid of liberal leadership, yeah. Russell tends to do well when the 10 years below 4.5. Can you provide more data on this? Not really. It's just watching the tape. Just watch the tape. What do you think about the yield curve inverting back a couple months ago? You mean uninverting a couple months ago? Historically, this was followed by a recession. Okay, so you mean uninverting. SPX seems to be steadily going higher. Well, the SPX is a market index. It's not the economy. And any thoughts about investment strategies that have recently gained popularity that look at the momentum to determine whether to invest in SPX or not? 300-day absolute momentum tip is okay. I don't know what any of that means. I think you're leaning more towards some kind of technical stuff. How to ignite interest in finance? Can it be done, or it has to be natural? Nothing is more addicting than success. If you invest in the market and you start making money, you'll be addicted. How can I learn to think several steps ahead? Experience. It's just life experience. It's just life experience. How to help yourself from any situation, maybe in career or life, without a mentor. Life. It's expensive and it's a long way around, but life. Do self-help books help? Nope, not one bit. I was an Elon fan, but seeing the argument on the other side made me dislike him. Who to trust then? Are there any good people? Well, I mean, I trust his intentions are good. He's certainly an erratic figure. I trust his intentions are good. I'm not against what he's doing. I think what he's doing is necessary. And how else are you going to do it? Through negotiation? No politician wants to cut spending because no politician wants to cut spending in their district. Right? There is no other way to do this. I think it was a little while back I said that democracy was broken and what the U.S. needs is a dictator for a period of time to get this shit done, because nobody's going to willingly cut spending. Reagan had this problem. He tried to cut spending and he hit a lot of resistance right away because nobody wanted any spending cut in their district. Period. Not in my district. Go to somebody else's district. So you couldn't get anything cut. You couldn't get anything passed. So you need a method by which you bypass Congress altogether. No, it's ugly, but you asked for it. The spending was out of control, and now nobody wants to cut spending in there. You asked for it. This is how it has to be. So yeah, it's uglier than it needs to be. But I think they all had their chance. How many years have they had their chance to do something and they did nothing about it? They had their chance. Let this guy do it. Right? If they are going to charge their customer more, we are going to charge our customer more. Yeah. Looks like you are intentionally misleading your audience. No, that's what tariffs are. Tariffs are a tax on you. Tariffs are a tax on the stuff coming into the country. You pay the tariff. You're smart. Okay. Piss off. This is what I want to avoid on this is why I want to move the conversation to Discord to just avoid people like that who really just can't even see what's right in front of their face. Struggle to understand the price movement of commodities based on futures contracts. Could you explain? That's a seminar. Okay. Okay. There's two more. I guess I'll do it. If they're going to charge their citizens more, we're going to charge our citizens more. A couple of points. This assumes that there are no other domestic substitutes for the imported goods. If there were domestic substitutes, you wouldn't have that were in the same price. You wouldn't have imports. You have imports because they're cheaper. So if you are going to raise the price by putting tariffs and you substitute to the domestic supply instead, the domestic supply had always been there. You didn't use it because you used the imported, which means you're going to pay more anyways because you have domestic supply. Again, you're going to pay. You will pay more. U.S. car costs considerably more in Europe than are sold in the U.S. Yeah, but if you want a Mercedes, you want a Mercedes. If you want a BMW, you want a BMW. If you want a Volvo, you want a Volvo. I mean, it's so. You're saying that okay, well, we don't have to get an Audi or a BMW or a Mercedes. Maybe we'll get a Cadillac. Okay, well, restriction of choice then. So you're not. What I'm doing is I'm restricting what you can choose from. It's the same thing. You're going to buy something that you wouldn't have bought. So if there is something of it, you can't. I don't know that saying a car is available. Either the car you want is available or it's not. Either there is no Ferrari in the U.S. There is no Lamborghini in the U.S. Is there Porsche? I don't think there's Porsche in the U.S. either. None of those cars are in the U.S. So if you want them, U.S. doesn't have them, right? European consumer will just purchase similarly featured, less expensive car produced locally and not be charged more. Well, if there was a less expensive vehicle to begin with, why would I be buying the import if there's a less expensive option? So let's say that I can buy an imported, I don't know, something that is comparable. It can't be like a bottle of wine because they're all very particular. You're buying a particular name, not so much at, oh, well, I guess I could have the Niagara Zin. There is no Niagara Zin, right? But let's just say that you could buy a particular item, either imported or domestic. Let's say a bundle of socks from Vietnam for $19.99. Or you could buy the union-made socks for $24.99, and you say, "Well, I'll buy the ones for $19.99 instead of $24.99." But now there's a tariff on them, so now they're $27.99. You say, "Well, I'll buy the $24.99s." Yeah, but you were buying $19.99. You're not going to buy the $27.99, so you're not going to import that. But now you're up to $24.99 when you were at $19.99. So even though that's what the tariff is designed to do, is make you shift to a domestic product that was more expensive before the tariff, in the end, you will pay more. You will pay more. So you have to look at the price of what you're going to substitute to domestically in relation to the price that existed before the tariff, not after the tariff. Trump wants an even playing field. Well, then compete. Compete if you want an even playing field. Find countries that are using an unfair advantage and compete. Compete if you want an even playing field. Now, I will say that the level of U.S. tariffs are rather low. They could be higher. But to come after Canada, to come after Mexico when you have free trade agreements, to go after your closest partners with 25% across the board, that is a level of stupidity. The damage that's going to cause is way more than the benefit you're going to get out of it. I live in a small island, no exchanges. I do live in the same time zone as Australia and New Zealand. Understand the U.S. markets offer more choices, more sophisticated than the ones I mentioned, but there's a significant time difference. Markets are open while I'm sleeping. Yeah, that is a problem. I would like to know what the risks are if I can't be up when U.S. markets are open. Well, you would just customize your strategy such that you're not trying to trade the day's events, right? That you don't really care what happens day to day. You only care what happens over a period of a couple of months. I want to learn and start building an income portfolio. Watching your videos, I understand that I will most likely face withholding taxes. Yes, you will. It is tedious to be an income investor when investing in foreign markets. Yes, it is. Could you point me to the applied level videos that would suit my goals? If you have no exchange where you are and you have no tax treaty, your island has no tax treaty with another nation, that's just going to be tough. Now, with those withholdings, depending on the tax system you have, they could substitute for the taxes you would pay in your own country anyways. You're going to have to pay tax to somebody somewhere. So now I can't speak to the tax system you have on your island, so I think that's about the best I can do. Anyways, this was a long one. There were a lot this time. Other than two, they were all pretty good questions, and there we are.